Has the global health pandemic totally shut down the real estate market in Philadelphia? Stay tuned for some data that shows that COVID-19 may have slowed down the market, but it has not totally stopped buyers. Hello, I'm Veronica Woods from Daniel Woods Real Estate Company. If you're new to watching my real estate wisdom videos, I publish a new one roughly every week, and it's always on a topic related to general home ownership or real estate investing. Now, wherever you're watching, if you have a comment or a question, I encourage you to leave it below the video. Wherever you're watching, I do publish these videos on a couple of platforms, and it's important to get your feedback because I want to help you on your real estate journey. Now, let's get into the topic at hand, talking about the impact of COVID-19 on the real estate market here in Philadelphia. Now, quite frankly, a lot is really unknown about the overall impact to the financial markets. We're all really adjusting to a new normal that involves social distancing, wearing face masks, and doing business as essential only as needed. With that being said, I've been tracking a lot of data and reading information from economists about what they think is going on with the market. And I wanted to take the time to share a few reasons why, as homeowners or future homeowners, there are a few reasons to be optimistic about the real estate market, even with all this uncertainty. The first reason homeowners should be optimistic is that mortgage rates continue to be at record lows, which means that it's still going to make a lot of sense for a number of people to buy versus rent. The biggest roadblock we're seeing since the pandemic has broke is that there's a lot of pressure on employment. Unemployment rates have increased. But if you have a stable job and that you're not impacted financially by what's going on with the global pandemic, this is probably a great time to buy, and it's still very possible before the end of 2020. The second reason homeowners should be somewhat optimistic is that a recession does not always equal a housing crisis. The stock market and the real estate market do not always go in tandem, and this is what the chart above shows. So in the last recession in 2008, there was a sharp decline in housing values along with the stock market, but that was because the 2008 recession was actually caused by problems in the real estate market. If you look at the other the four previous recessions shown on the slide, 3 out of 4 times the home values actually increased. Now I'd like to show some stats for March 2020 in Delaware County and Philadelphia counties. And this is really going to show the slowdown week over week. And this is something that I was really watching closely to make sense of just looking at the underlying health of the real estate market for these areas that I serve. So if you look at overall sold homes, if you compare March of 2019 versus March of 2020, the actual homes sold has been relatively flat. So there's no signs that there's less people looking for home or that looked for homes in March this year versus last year. The story continues to be about the inventory, however. So you can see if you compare in the blue chart, the blue bar is Delco and the red bar is Philadelphia. But you can see in both counties about a 50% decline in the number of homes on the market. Now, this isn't all because of COVID-19. There's been some other factors. We've been talking about it being a seller's market for well over a year. So homeowners have been slow to putting their home on the market for a number of factors that I've been reflecting in my market updates. But now if you start to break down week over week, So I really started to look at the stats from March 1st. So looking at the last 5 weeks and looking at the trends in new listings, which are new homes on the market, and closed sales. So you will see the blue bar in both counties is relatively flat over the last 5 weeks, but you can see a market decline in the number of new listings. So homeowners starting in week 3 when the schools were deemed closed, and then a further drop off in week 4 when we had the stay at home orders. And quite frankly, it's been the combination of people need to stay at home and homeowners, especially if they lived in property, not feeling comfortable of doing showings and having people they don't know in and out their house. Now, if we look at pending sales, which is a metric on the number of closed or new contracts, so buyers and sellers agreeing to go to closing but not actually getting there, you also see a decline starting in weeks 4 and 5, or week 3 and 4, again with the stay-at-home orders and just less traffic besides online of looking for houses. One last stat that I was watching but I didn't put in a chart were the homes switched to temporarily off market. Now this stat is used when you intend to sell but you want to take a break. Now I looked at the data over that same 5-week period, and week 4 is when the peak of homes got taken off the market. And as you remember, that's the week that the stay-at-home order for all non-essential business came down. So in Delco, there were 70 homes that were taken off market that week. And in Philadelphia County, there were 185 homes temporarily placed off market during that same week. Now, what this data is telling me so far is that there will likely be a lot of pent-up demand once some of these travel restrictions are lifted. We don't know when that will be, and I would predict that it will probably be in what we've been calling this new normal. Don't know exactly what that is, but I would say there'll be a lot more virtual interactions, looking at homes, virtual tours, and I would expect more pre-qualification before doing physical showings. That would just be something naturally I would expect, as I don't think we're going to automatically switch back to the way business was done before. I will continue to monitor these stats week over week. If you have a question about a particular neighborhood and the trends going on there, feel free to either leave me a comment or send me a direct message. I will be happy to provide that additional data for you. Thanks again for watching another Real Estate Wisdom video. I'm Veronica Woods from Daniel Woods Real Estate Company. If you enjoyed watching this video, please hit the like button, hit the subscribe button if you're watching on YouTube so you'll know first when the next video is published. Feel free to send me any suggestions of additional topics that you'd like me to cover on this series, and I will keep coming up with ideas on my own that will help you put more or keep more money in your pocket when you're buying and selling real estate.